You know how everyone says you need to own your rental properties in an LLC? Well, I know one investor who owns 18 rental units, has no LLCs, and he sleeps very well at night without worrying. And in this episode, I'm interviewing that investor to learn why he doesn't use LLCs and what he does to protect himself instead. And we're getting started right now. Welcome to the podcast, Real Estate Investing with Coach Carson. I'm your host, Chad Carson. You can also call me Coach Carson. And this is a show to help you get out of the financial grind so you can spend your time doing more of what matters. Now, we're going to go to the interview in just a second, but I need to give you a disclosure up front. In this episode, we're going to be talking about a legal topic, but I want to make it clear up front that we are not giving you legal advice. This is an education and an entertainment channel, and there's no way you want to listen to two people on YouTube and make a final decision about a legal topic from what you hear. You should always discuss the specifics of your situation with a competent legal professional. Now, with all of that said, this topic of whether you should use an LLC with your rental properties is usually pretty one-sided in favor of always having an LLC. And I wanted to give you some counterpoints and have a conversation with Dion from the YouTube channel, Dion Talks Financial Freedom, to give you some things to think about, to give you some arguments, some discussion points from someone who chooses not to use an LLC, so that when you go back and have your own discussions, you'll make a more informed decision and you'll have a bigger picture of the pluses and the minuses. So with all that said, let's get to my interview with Dion. So Dion, every time I talk to pretty much anybody in the real estate investing space, they're like, well, of course you need to get an LLC. That's just the way things are. It's almost like it's one of those rules that's like, it's not even talked about because it's just assumed that that's the case. You and I had an offline conversation, kind of dialogue, where you said, actually, no, that's not what I do. In fact, I don't think, in my case, I'm not even using an LLC. And I said, we have to have this conversation. All right, let's talk about this, Dion. So thank you for coming on and having a chat with me.
No, I really appreciate it. Actually, I know quite a few investors, and of all the investors I know that invest in rentals, none of the investors I know use an LLC for the reasons people think they need them. Right? Matt, the lumberjack landlord, has one for healthcare. Right? And he had some health concerns with one of his kids, so he formed an LLC to get better healthcare when he retired. And my concern is never that the investor with 10 or 20 properties is worried about how to structure their business. My concern is always that person that has one rental or no rentals yet gets stopped in their tracks because they see something on Bigger Pockets or something in the Choose FI community where attorneys and CPAs jump in and go say, you better have an LLC for asset protection or the tax benefits or this list of reasons that they give. And then that new investor has to go, how do I name it? How do I form it? How do I fund it? How do I redo it? How do I pay myself? How do I keep my finances separate? All of these things that just stop them from ever actually buying a rental, renting it out, and collecting rents.
You get overwhelmed before you even start. And you're like, oh, I can't do this real estate thing. I had enough other issues, and now I got to form this LLC. So exactly. Well, I want to get into a couple case studies or maybe nuances of different people and why they might or might not have an LLC. But let's talk about you. Maybe we could even do this like if you had like a ledger in your head. Like on one side of one side is like, why would I have an LLC? Why would I not? Let's start with the why would you not, and why did you choose not to do them in your case?
So for simplification, there are 2.5 reasons I would have an LLC, and about 20 reasons I wouldn't.
There we go.
So the woods are if I had partners, it protects you from someone else's mistakes. That's the point of the LLC. And the second thing is if I needed lending that required an LLC, I would obviously have one. The list of reasons why I don't. 1, there is no asset protection unless you have partners. There are no tax benefits unless you have partners. So the IRS in 1996 determined that all sole proprietor LLCs, which is you or you and a spouse in an LLC, are disregarded entities. So there's no tax benefit at all to having an LLC. Everything, it's a pass-through entity. Every expense that a person with an LLC gets, I get. So the people who go, oh, no, I get to write off my cell phone. Me too. I get to write off a home office. Me too. I get to write off my car. Me too. Every single expense that you can write off an LLC, except for the cost of forming the LLC, I get to write off as a real estate owner myself. So there's no tax benefits. That's the main reason I don't. The other reason that I don't is you're more likely to get sued. People think a company has deeper pockets than a person. So when you see the name of an LLC, you figure it's somebody with big pockets, so you can sue them. Your insurance costs go up. You can't do certain. People get tricked into doing landlord policies. I don't have one landlord policy on any of my properties. I have property insurance. I don't have rental coverage, but I have all of the coverages that I need without being in an LLC. Lending is so much easier, right? You lose the ability to house hack in an LLC unless you commit fraud. People say, well, just buy it in your name and then put it in the LLC and don't tell the lender. So the lender's taking more risk without their awareness. So that's fraud. You're not allowed to represent yourself in court if your property's in an LLC. So even just filing an eviction, which is that filing that might be the thing that prompts the person to pay their rent, you can't do without the expense of an attorney. If you're in a state like California, I'm very sorry if that's where you are, and this is my opinion, not Coach's opinion. This is personally my opinion. My brother has rentals there, 3 of them in his own name, not rent controlled. If he puts them in an LLC, they are now rent controlled because you have to know your local laws on whether it's impacted or not by that. There is some municipalities require that you put your property, your LLCs in an S corp, adding another layer to your tax obligation and the expense. I can't imagine why attorneys and CPAs who make their money off of people having LLCs would recommend that you have an LLC.
So you're saying when I go get a haircut, the barber would probably tell me I need a haircut. Is that what you're saying?
Yes, I don't have that problem, but yes, that's exactly what they would do. Your lending changes, right? You're not doing VA, you're not doing FHA, a lot of conventional loans you're not doing. And so the commercial loans, the DSCR loans, the hard money loans that require an LLC. So if you're using the lending and it requires an LLC, I recommend you have it. But if you have an LLC, you trap yourself into that need to use certain types of lending that is worse lending. Cody and Christian, they did multifamily strategies. They've been on Bigger Pockets. They invest. They're both moving to different areas. But Christian purchased a property in his own name, put it in an LLC, went to refinance and couldn't. Had to pull it out of the LLC. So an event to then be able to refinance. You just put all of these barriers in front of that person that's starting out that you don't need. The 2 counties where I invest, they don't pierce the veil. So if you Google piercing the veil, most judges can find something that you did wrong. The way you filed it was wrong. You commingled your finances. You used one credit card at Lowe's for the wrong expense one time. Your whole LLC means nothing. That's what's been going on for years. What they're doing now is a lot of municipalities, a lot of court systems are using the 1996 precedents that I mentioned with the IRS that all sole proprietor LLCs are disregarded entities. They don't exist. When you get sued, your assets are at risk, and all of your LLCs are your asset. So if you have 10 properties and you want to put some into different LLCs and you have the cash flow to handle it and it doesn't stop you from buying more rentals, go for it. But if you're a brand new person at investing that doesn't even have a rental yet, unless you have partners or need the lending, there is no benefit to the LLC. And there's so much to learn with it that it will stop you in your tracks. So it's already hard enough. Like there's so much we need to learn to buy that rental, to rent it out, to how to pick a market, pick a strategy, find the great deal, how to finance the great deal, how to manage it once you own it. Like there's this mountain that we have to climb. Why add to it?
Yeah, I like it. So that's a really good summary, by the way. There's several things I want to unpack and kind of dive back into. So that was good. I think one thing that's clear to me that I 100% agree with is that you have like different people. There's always it depends kind of answer to these kind of questions. But for a new investor, somebody who's just getting started, I don't have any properties or I got one property, like you've got all these things, like you said, that you need to worry about. And having an LLC as your top priority, even the attorneys I've talked to who sell LLCs, I've kind of pressed them on that. They're like, no, that's probably not your first priority with your first property or two. So it's pretty clear that for most people, like that's one box you're in. And then we got all these other nuances when we get like more properties and partnerships and things that I want to talk about. But I want to unpack some of the reasons why, like, because this is always like every investment decision you make is like a cost benefit analysis. All right, I have to do all these costs of having an LLC, literally a cost. I've got to have some hassles, all these things I got to do for the benefit of, we think, tax liability protection. And there's one thing you said, let's talk about what liability protection means, because I think if somebody's just hearing that and us kind of glossing over that, what does it mean that we have liability? Like, so maybe unpack that a little bit. Like what are we at risk for if we own a rental property, we have this wide world we're in and we're walking around and we're personally doing stuff. And then we have this rental property stuff. Like, what are the kinds of things you think that most landlords are worried about that they would even want to start thinking about getting an LLC?
So first, in my opinion, there is absolutely no asset protection from having the LLC unless you have partners. So I have 3 forms of asset protection that I use that make me sleep like a baby, and none of them are having an LLC. Now, if I had partners, me and Millennial Mike were looking at buying a place together in Gary, Indiana. We, even though we're close friends, would have formed an LLC. We would have got everything in writing now while everybody's getting along, because in 2 or 3 years, when there's a disagreement, that's not the time you can put anything into writing. So you do that all up front with the LLC. That's its purpose. So asset protection, clarity with partners. Since I don't have partners, here's how simple my business can be. 18 rental properties. I'm house hacking in my duplex currently. I have 1 checking account total, 1 saving account, 1 credit card, no LLCs, 1 spreadsheet with a tab for income and a tab for expenses that me and my CPA made together. So it has what I need and what they need. That's it for the whole business. Your area might require a separate account for deposits, right? So know your local laws. But if you have an LLC, you now need business accounts. You need separate accounts, separate credit cards for each business. You have to track all of that data. The asset protection element comes in when people say, well, if you don't have an LLC, you can get sued. No, you're more likely to get sued with the LLC. So with or without, you're probably eventually in this game long enough, you're going to get sued for something. Somebody can.
Is that idea that you would be more likely to be sued? Is that just like kind of conjecture? Maybe you've seen that be the case? I don't know. I mean, it just makes, I can see that kind of anecdotally making sense. Like, oh, their corporation, they have more money. This is just Dion. Surely Dion doesn't have that much money. I mean, they might still think you have money because they see you have some properties. They could look it up online and say, hey, Dion has 16 properties. Like, I'm an attorney. I'm going to sue Dion because I see he has 16 properties. So I guess I'm just wondering if that's really a thing.
No, this is actually from running a business. I was the president of Commercial Driver School in Washington State for over a decade, and I saw several litigations go through with different companies that we work with. People are not likely to sue a mom and pop organization. Guy owns 1 truck, they're not going to sue him. Company owns 10 trucks, they're going to sue him. In real estate, if you are the owner, people think, so the intent when we sue somebody is often not to win a court case. As humans, most people who start a court case, the people who work the system, are looking for a settlement. And a corporation usually has a settlement fund. Here's how we buy ourselves out of court. Whereas the mom and pop is probably going to have to just go through court because they don't have $10,000, $20,000 sitting in an account to pay people off. So it's not to draw out a long court case. It's the people who are like, if I sue for a reason, this property that's an apartment complex, I slipped on the ice, you didn't put down the salt, they're just going to give me $6,000. They're going to tell me, shut up, go away, here's $6,000. Are you happy? And that's what they're looking for. So the deeper pockets isn't that they think there's a bigger payout at the end. They think there's an easier payout at the beginning because they're more likely to settle. So that's why corporations are more likely to be sued than an individual.
Okay.
Right. So there are many things that you can get sued for. Somebody can get injured. You can be sued for discrimination, right? I talk often about, I divide my real estate into 3 categories of tenants. I have 1/3 military, 1/3 Section 8, or 1/3 working or retired as a diversification strategy. And some people would say, well, if you put an ad out that says no military allowed, imagine the lawsuit you set yourself up for, or Section 8 only, right? So how I do that is I control where I advertise, not how I advertise. The screening criteria and the advertisement looks exactly the same. But if I want a military tenant, I send it to the Post, right? Advertise on JBLM, the closest base to me. If I want a Section 8 tenant, I send it to the counselors at the housing authority and I say, hey, this unit comes available on Tuesday. Can you share it with your clients? Who am I most likely to get as one of the first applicants? That's how I can do this legally. But you are probably going to be at some point sued for discrimination on something you never did, because it's such an illusory subject that people think, well, I can have a long drawn out case or I can settle. So a corporation, again, is going to have those issues more than a mom and pop person is. So other ways that you can get sued with your property, I mean, there's almost, because you can sue people for anything. Yeah. It's really hard to get a case thrown out.
And you personally can get sued too, right? You driving across town and you have, you hit somebody or you cause a medical issue and they have $500,000 in medical bills. I mean, that's also the risk, right? It's not just the tenants suing you, it's you personally and being sued. So what would you say to that? I mean, like, one argument for having a LLC is that if it works, we could talk about whether a single member LLC, works or not. But if it works, you've provided like a different bucket. You've not put all your eggs in that basket, and so they could go try to get your LLC, but those assets are in a separate bucket. Like, how do you think about that?
So that's the myth. People think they're going to sue the LLC so that everything in that LLC is at risk. They're going to sue you. There are even people who try the shell game where they go, I'm going to go through Wyoming and they can't find out who I am. Do you think attorneys spend all those years in college and pass the bar and don't have the ability to do a Google search? If Cody and Christian Cody can find the owners of LLCs to be able to buy his properties, you don't think an attorney is going to be able to do that? You are the one being sued. So each of your assets is just as at risk. So in my opinion, it's not, I'm saying, okay, if you don't have an LLC, you just you'll have all this risk going on all the time. You have the same amount of risk with or without an LLC. So what we do is we mitigate that risk. The first step, just like a person driving their car, you should have insurance, right?
Yeah.
It's such of a weird thing that we have to have a law that says you have to have insurance because you can get sued. You run into somebody, you're going to be liable for the damage. So on your properties, you have insurance, even if it's paid off, right? You don't have insurance to rebuild the house. You have insurance in case somebody falls down the stairs. You have insurance in case when there's a fire, somebody's in it. You have insurance to cover all of these things. Now that insurance premium, I go with a really high deductible because I never really want to use my insurance unless it's a real catastrophic event.
Yeah, me too.
That keeps your premiums low, right? And they have a limit. So I tend to do about $300,000 for a slip fall. So injuries covered up to that. And then I do full replacement value of the house, right? I don't do just mortgage coverage so that the bank is made whole. I want to be made whole too. So my premiums do cost a little more for that bigger coverage. But somebody could get injured more than $300,000. And that's where your property is at risk, right? The first barrier is you have insurance in place. Well, what if it goes above that? So if you have that one property and nothing else, you might just need that insurance policy. But if you have 3 or 4 properties and the value starts to be in the millions and somebody could sue you for more than $300,000 in actual injury, to protect those other properties, this is when we add an umbrella policy. So I have a $2 million umbrella policy that kicks in. So if I have a problem on a property, get sued, and it goes above the $300,000, that's the first threshold. Then the umbrella policy kicks in. Now it's not just me against the case. It's that umbrella policy's company trying to protect theirs and my money to stop this. So I'm not alone. So the first form is insurance, and it's a 2-tiered way. The second form of asset protection, and I don't have this on all my properties, right? I have 8 properties, 18 units. 6 properties have a mortgage, 2 don't. One form of asset protection is leverage. On those 6 properties, the bank is in first position. Well, I could be at risk, and my assets that are free and clear could be at risk. They can't take the bank's first position if I'm sued. So leverage is a form of asset protection. And there's also the benefits of levered depreciation so that I can have a couple $100,000 a year in profit and still not pay a penny in rental income tax. That's a nice benefit. But the third form of asset protection is the most important. And this is the one that gives you the strongest leg to stand on in court and the one that most people mess up. Be proactive. Do walkthroughs, check for safety things. When a tenant makes a complaint, answer in a timely manner. If it's the cabinet door squeaks, yeah, that goes on the list of the next time a handyman or contractor is there to do something, they will also take care of that. If it's the banister on the stairs is loose, well, that's a today issue, right? If it's a Saturday, that's still a today issue. Take care of those things, be proactive, react in a timely manner. That type of asset protection gives you the ability to go to court and say, here are the steps that I took to ensure the safety, because that's the 3 things I look for with my properties is safe, clean, functional, right? And safe is first. It's the first thing, just like on any workplace, safety comes first. If you have something that puts your tenants at risk at your property and you don't take care of it, you probably should lose the lawsuit, right? Yeah. That's what I'm saying. Be proactive. It's the one most people mess up.
Yeah, I love those steps, and I want to pause here because I want to go back to some of the LLC stuff. And typically where this conversation goes, Dion, you know this because you've had this conversation, is to kind of just go really deep on the legal stuff. And we're not even attorneys, but we can try to pontificate about this. But really, like to me, the most important thing are the things you just said. I just want to circle. Number 1, be proactive. Number 2, have insurance. And if you boil this down, like I'm willing to bet, if you asked 100 experienced investors, heck, if you asked 100 attorneys who also invest in real estate, what are the things they would say? Like you need to do, have insurance, have really good insurance. But the proactive part, they would also say, I think so many people, we spend so much time thinking about asset protection, thinking about legal structures, thinking about all this stuff. I mean, I know people who spent crazy amount of structures and all sorts of, if they would spend the same amount of time and money they do on that, on like improving their business systems and actually like maintaining their properties well. And I'm not saying they don't, but like, I love that point, Dion, because I think it kind of misses the most obvious thing in the world, which is like our job is to make sure we have safe rental properties, make sure we take care of them. And then also when you do have a problem, like I've had a couple of tenant issues, not many in 21 years, but then if you do have a problem and there is something, not to ignore it and be like this anonymous landlord who nobody knows about, like actually like talk to the person, have that sweaty palm conversation where you're like, all right, what's the problem? How can we fix this? All right, let's talk about it. And often, that diffuses some of like the negativity that then blows up into a lawsuit later on because people ignore it or, so I don't know. That's kind of my thoughts there is that the proactive part it doesn't talked about, but man, it's like the most important part.
Yeah, and you reminded me of something when you said be there and talk and be human and try to solve the problem. And I've never said this out loud before, so I'm going to try to articulate it in a way that makes sense. I have some friends, acquaintances over the years who have said things. Now, I worked in law enforcement, right? So I had friends who always comes up into criminal conversations. They would say things like, I would never steal from a person, right? I don't want somebody to experience loss, but I don't mind stealing from a store because it's a corporation. Have you ever heard any of your friends say something like that? Maybe acquaintances, not friends.
I've heard people say that, yeah.
Okay. Well, suing a corporation doesn't mean somebody's suffering. Suing a mom and pop organization means you're taking from a person. That subconscious mindset of I would steal from a store but not a person translates into I'd sue a corporation, but not some husband and wife that spent their life savings on buying a rental. Right? It's like ingrained in us that corporations are evil and it's okay to benefit from their loss. So becoming a corporation, making that LLC makes you more likely to be sued, increases the cost of financing, removes some of the benefits of house hacking, like owner-occupied down payment and interest rate. Not doing that in an LLC. You just put all of these barriers. So for all of the haters that come in the comments, remember you're talking to Dion, not Coach. If you have 10 rentals and you put 2 in every LLC, I don't care. Go for it. You're going to buy the 11th rental. It's that person with 0, 1, or 2 that will absolutely not be able to buy the next one because they overcomplicate it. Mm-hmm. This can be as simple or as complicated as you want to make it.
Yep. Yeah. And I think also I was thinking about just different people who I know who get into real estate. Like I think a lot of people are doing the house hack. They don't have a lot of assets. They're just getting started. Like in a vast majority of situations, like go buy the property, worry about this other stuff later, get insurance. There are people like, so I'm thinking of like, all right, somebody's got a $2 million net worth. They make $500,000 a year. They're in a prominent profession. They're a doctor or something where like they're investing in their local town. I could see some situations where having like, all right, I'm going to buy this in LLC. Yes, it could get discovered in a discovery from an attorney, things like that. But I'm going to run that LLC like a business. I'm going to have a property manager. Like I could see people in certain situations where this is an across the board kind of recommendation, but I like that you're pushing back on this because the reason I wanted to talk about this, Dion, is that there's so many narratives in business and real estate that just kind of get unquestioned. They're just like, oh, this is the way things are. And this is one of those things that just people just assume I've got to have this big complicated structure. I got to pay a bunch of money to do this. And yet there are people who have thought about this and thought it through and have looked at all the reasons why and said, no, what, this is the way I'm going to go. And you do you.
Yeah, no, and I appreciate the chance to come on here and talk about this because there is somebody who needs an LLC that's watching. If you have partners, if you would sleep better at night with your 20 properties divided up in LLCs, it's great. And Michael Zuber from One Rental at a Time and Matt, the lumberjack landlord, are always very careful because of the size of their portfolios that they never say have or don't have an LLC. But as their friend, I can tell you, neither one of them has their properties in an LLC, and they both have over 100 units. So it's possible to invest in real estate with those forms of asset protections. Now, they have done things with partners and other stuff in the past where they've used LLCs. They've used hard money that needed an LLC, so they've done that. But their rentals aren't in an LLC because no tax benefits, no asset protection without partners, right? The same thing. And so for me, if I needed an LLC, I would get one, right? For those reasons that they're there for. So I'm not saying don't have an LLC. I'm saying look at your specific, unique situation, because everyone's is different, and think, is there a benefit to having it? Is that benefit worth the cost and the extra work? Then yes. If there isn't, that's who I'm trying to reach.
The other takeaway I hope people have from this conversation with you, Dion, is that also think about liability a little bit broader. Like if you're trying to solve a problem, an LLC seems like an easy solution. Let me go pay an attorney. Now I don't have any liability. And even no matter what, even if you think it does help you, there's no secret silver bullet that's going to solve all your liability problems. What I'm hearing you say is like, take a little bit more broad approach to this. Be proactive, have insurance. I would also add, think about your business strategy. Like you're what I would call a small and mighty investor. Like you're not out there flipping 100 properties per year. You don't have 100 tenants. Like there's a lot of liability when you do more. Like you have more properties, more tenants. I found for myself, like I would like to get even smaller than I am now because I have a hard time paying attention and giving the quality of attention to the properties I do have. The bigger you get and the more you get. And so I just think this is there's lots of arguments for keeping it small and being small and mighty, but I think this idea of liability and being proactive and being able to pay attention to everything and treat it well is another reason. Like I resonate with you too on the size of your portfolio. Like you can get bigger, you can get too big for your britches and like get way overexposed by being big.
No, I'm definitely right out of the book, small and mighty investor. Like the mindset of, as I was getting close to retirement in 2022, I had 16 rentals at the time. I've added a duplex since then. As a house hack on the water, like where I wanted to live was what actually mattered to me, more so than anything else. But I've said, as I was retiring, I have 16 rentals. I don't know if I want that many. Right? There's a chronology to investing. When you're in growth mode, it's acquisition phase. It's how do I get the next rental? How do I make more money, spend less money, save and invest the difference? We get in that mindset. For me, it was a decade. And you build some ingrained traits and skills that are hard to break, those habits. So when I retired, now it actually makes sense. And I would never say this to somebody growing a portfolio. I might sell a property, pay off debt, increase my actual overall cash flow, reduce the number of things I have to take care of. In growth mode, that would be terrible. Right? One of the biggest mistakes I made was paying off a mortgage in growth mode. Cost me at least $1 million. In retirement, I wouldn't care about the lost $1 million. I would care about quality of life. How much more stable is my portfolio? How less? It takes me 2 hours a month right now to manage my portfolio. Maybe I can get it down to an hour and a half. Get that down to 10 or 12. Like my brother has 10 paid off rentals. He's coming up on a decade now of being retired, and it's had almost no stress with his portfolio. And I would say he's called me a moron for having mortgages. In growth mode, I would have said he's making a mistake not having them. But when you look at his 10 paid off and how simple that can be, and what he gets to do, he travels, we scuba dive in all these different countries, and he doesn't have 100 units. Because even if with a property manager, 100 units means I'm going to be dealing with yes or no on an eviction. I'm going to be dealing with tenant turnover. I'm going to be dealing with rehabs. I'm going to be doing all that stuff with a small portfolio. You deal with such a smaller scale of what's going on that it is easier to have more time freedom. So that's why I watch you all the time, and I learn from you so much from what you put out, that it's like you can do this without having to constantly forever be in growth mode. Hard part is what's enough. Once you figure out what is enough, then it's a lot easier to get there, because some people never leave growth mode.
Yeah, very well said. 100%. You said that really well. And I think we've given people a lot to think about, and specifically with asset protection, specifically with LLCs. Dion, this has been awesome. We need to do this again. So thank you for coming on. Thank you for your feedback, and let people know you have an amazing YouTube channel, which I also watch and I follow along with. So people know where they can hang out with you, and I'll put links to everything you say in the podcast and the YouTube description as well.
Well, thank you so much for that. It's Dion Talk Financial Freedom. I do short videos throughout the week, and every Tuesday at 4 p.m. Pacific, I do a live stream that lasts as long as the questions do.
Nice. All right. That's a good opportunity. So check that out. I'll put links to both of those, and we'll talk to you soon, Dion.
Ciao.
So in this episode, we focused a lot on the rental property itself and how to protect yourself from the liability of owning it. But we didn't talk at all about the big picture of how you actually use rental properties to achieve financial freedom, to to do what Dion's done and have a lot of cash flow coming in, to do what I've done and have the ability to travel and have flexibility. So if you're interested in that, my next video is all about how to start from scratch and to build a rental portfolio that produces $10,000 per month. And I go step by step through the strategy, through the plan. You can check it out. There'll be a thumbnail above me here on the video, or if you're listening on the podcast, you can check it out and click the link in the podcast or the YouTube description below. I'll see you in the next video.